It is 8:57 a.m. Pacific Standard Time. It is the 9th day of October, 2025, and this is episode 1186 of BitcoinAnd. Am I right? Is it really 1186? It certainly is. It's 1186, and Luxembourg tanked Bitcoin. Yes, they did. Because you sell the news. And boy, there's some news about Luxembourg. We'll get to it. Wallet of Satoshi is back in a little bit of a different format. I got a bit of pushback from when I posted it on Nostr and said, hey man, Wallet of Satoshi is back. And well, there is an issue. Okay. For those of you who know and love Wallet of Satoshi, you kind of know what it probably is. If you've never heard of Wallet of Satoshi, I'm going to talk about it because it doesn't matter what the pushback is. Wallet of Satoshi is a solid wallet. And when the Samurai stuff broke, the regulatory guys, capturing the guys over at Samurai and all that stuff started happening, Wallet of Satoshi basically bailed out of town because they just didn't want to deal with the long arm of the United States authorities, and I don't blame them, honestly. So you're here for all the news that you can use about Bitcoin and more. It is the BitcoinAnd podcast. I am your host, David Bennett. Polymarket, we're going to be talking about Polymarket because, they're adding Bitcoin deposits. They are. And then the UK I was talking yesterday about the UK kind of backtracking on stuff. They're backtracking on some other stuff as well when it comes to the entire industry. And BlackRock, we got to talk about BlackRock because just like what I was saying about strategy and their $31 billion just basically sitting around doing nothing but buying Bitcoin, you can't argue with success. Somebody makes $31 billion just because they bought into the good asset. You can't, that's success, and you can't argue with it. And I can't argue with what's going on with BlackRock either. Dorsey and Senator Cynthia Lummis seem to be singing the same song about tax relief, which makes sense because it was just yesterday that I told you about Square Bitcoin. And if you don't know what that is, I'll probably say a few words about it, but I go in depth on yesterday's episode of Bitcoin. And Arthur Hayes, he has his own view about the 4-year Bitcoin cycle. And we've been so steeped in the 4-year cycle. I kind of think that it's worthwhile taking a look at this cycle from a couple of different views. So we're going to see what Arthur has to say about it. And then a decentralized map, Open Ledger's latest edition of Sense Map. We're going to talk about it. It's kind of creeping me out a little bit, and maybe I'm wrong because I haven't read the whole thing yet. You're going to read it with me. But there's with the quick scan that I took of that particular article kind of gives me the creeps. And United States voters do consider digital assets as part of their reckoning when it comes to who they're going to vote for. And then SoftBank is going to be in the news, but we really need to get to this Luxembourg stuff. At about 2:05 a.m. my time, Pacific Standard Time, this particular CoinDesk article dropped. It's written by Ian Allison, entitled Luxembourg Claims Bragging Rights as the First Eurozone Nation to Invest in Bitcoin. It's not crypto, but Bitcoin with a catch. We'll get to it right now. A Luxembourg sovereign wealth fund has invested a 1% sliver of its holdings into Bitcoin ETFs, making it the first state-level fund in the Eurozone to do so, according to a representative for the Agency for the Development of Luxembourg's Financial Center. European nations Finland, Georgia, and the UK also hold Bitcoin, although most of that crypto is sourced from criminal seizures, according to BitBo, with the exception of Georgia, a nation that is outside the Eurozone that owns a whopping 66 BTC for investment purposes. During his presentation of the 2026 budget at the Chambre des Députés, Luxembourg Finance Minister Gilles Roth, good God, Gilles Roth revealed the European nation's Intergenerational Sovereign Wealth Fund, or the FSIL, has indeed invested 1% of its holdings into Bitcoin. Quote, recognizing the growing maturity of the new asset class and underlining Luxembourg's leadership in digital finance, this investment is an application of the FSIL's new investment policy, which was approved by the government in July of 2025, said Bob Kiefer, director of the Treasury, Luxembourg. Well, Luxembourg, one of the least populated countries in Europe, about 682,000 people approximately, introduced the Intergenerational Sovereign Fund back in 2014. Intended to build up a reserve for future generations. The fund holds a modest $730 million of assets, most of its investments being in high-quality bonds. Oh my. That's that's a painful position to have at this point in time. Anyway, under the revised framework, the FSIL will continue to invest in equity and debt markets, while now also being authorized to allocate up to 15% of its assets to alternative investments. These include private equity and real estate, as well as crypto assets. To avoid operational risks, the exposure to Bitcoin has been taken through the selection of ETFs, according to Kiefer. Quote, some might argue that we're committing too little, too late. Others will point out the volatility and speculative nature of the investment. Yet, given the FSIL's particular profile and mission, the fund's management board concluded that a 1% allocation strikes the right balance while sending a clear message about Bitcoin's long-term potential. Obviously, what's right for the FSIL might not be right for other investors. So there's the article. That's Luxembourg apparently being the first to dip their toes, but they're doing it through the Bitcoin ETFs. They don't want to actually hold the asset themselves. And I'm just not going to cry about it. They have to do what they have to do. They may have more policy strictures than we are even aware of. It's okay. It's just noteworthy that Luxembourg has presented 1% of their nation's sovereign wealth fund that's been alive since 2014 into Bitcoin first. And for right now, it seems to be Bitcoin only. However, I would expect that to change because everybody has to go through their bout of shitcoinery before they get burned so bad that they're going, we probably should just use Bitcoin. Okay, on to Wallet of Satoshi. They're back in the United States, and they're back on both the Apple App Store and the Android Play Store, or Google Play Store. So it's for both iOS and Android. If you were a Wallet of Satoshi user, this should make you happy. It makes me happy. Wallet of Satoshi was a great mobile app for the United States. Well, actually, for anybody that had, that had it on their mobile phone, it's simple to use. At the time, when back in the day, when Wallet of Satoshi first came out, there was more guidance concerning how to self-custody with Wallet of Satoshi, and it was a little easier to do. They're coming back out and they're saying, like, for instance, I posted, "We are so back," and then have a screenshot of a tweet from Wallet of Satoshi's X account, and it says, "A new Bitcoin era begins now. The world's best Lightning wallet. Now, self-custody. Available worldwide today." Well, there's a little bit of an asterisk right there. According to Wallet of Satoshi, it can be self-custody, but many people are pushing back on me, like Muslim Bitcoiner, and all this stuff is happening for me on nostr, says, guys, we really shouldn't be shilling this. Wallet of Satoshi uses Spark, which means all of the Lightning transactions, Bolt 11, and your balance are public. Much better wallets out there that are actually self-custodial. Okay, so this goes back to it, and I don't disagree with Muslim Bitcoiner. This boils down to the use case of whatever particular wallet you select. Hopefully nobody in my audience would be foolish enough to put their entire stack of Bitcoin into Lightning in the first place, much less trust something like Wallet of Satoshi to custody that entire stack. That's not what this wallet is for. This wallet is for like running around money, zapping people on nostr money, boosting my show. You would be able to boost my show with a Wallet of Satoshi wallet. So, if you wanted to do that, if you wanted to stream me Satoshis, if you want, whatever, right, whatever, you can just use it to pay almost any Lightning invoice that's out there. It's a slick wallet. It works very, very well. It's rock solid. It doesn't really screw up. It's always was my favorite go-to wallet before I found Alby. The guys over at Alby are basically my go-to Lightning stuff right now, and they have been for, actually ever since Wallet of Satoshi left. I love my Alby wallet. I love the way it works. I love the way it works with my mobile app. I like the fact that I actually host my own Alby on my own node, which is provided by Start9. It's an amazing piece of software, and I have no reason to go back to Wallet of Satoshi. I'm just saying that if you need a simple to use wallet, you might look at Wallet of Satoshi, but don't use it for something over like $5 or $10 or whatever it is that you're comfortable putting in a brown paper bag and lighting on fire, right? It's never was designed to be something where you held all of your wealth. So looking into it a little bit further, on their website, which is walletofsatoshi, all one word.com, walletofsatoshi.com, under their frequently asked questions, one of the frequently asked questions is, can I switch between self-custodial and custodial? And the answer is yes. You can use the mode that's available in your region and move your funds between modes, not nodes, but modes beginning with an M as in Mary, as needed. Follow the in-app instructions when switching to ensure a smooth transfer. But they don't say much more about it other than that. So this is most definitely a, pick your own poison. What do you need a wallet for? Do you need it to be fast and efficient? You need it to be like lightweight and just not a whole lot of lights, whistles, and bells? Man, well, Wallet of Satoshi's got all that, and it's got a whole lot more. But, if you are really concerned about privacy and really concerned about this custodial versus non-custodial issue that they're talking about here on their FAQ, then it will be up to you to take a deeper dive. I'm just happy that the Wallet of Satoshi guys have come back into the United States, which means that from a out of the United States into some other country point of view, developers feel more comfortable putting their Bitcoin and Lightning related stuff back into the hands of Americans, which in itself is quite a large signal as to where the United States is going on the regulatory front, right? Right. So let's move on to Polymarket, who's added Bitcoin deposits as NYSE parent ICE eyes a $2 billion investment. So we talked about the $2 billion investment yesterday, but what's this about adding Bitcoin deposits? Well, Micah Zimmerman from Bitcoin Magazine tells us all about it and probably more. Polymarket, the crypto native prediction market, has added support for Bitcoin deposits, giving users a direct way to fund their accounts with BTC alongside other existing shitcoin options. And yes, I changed the name from crypto. The move coincides with Bitcoin's recent rally to all-time highs of 126,000, currently trading at around 124,300. That number no longer is valid. We dipped to 120. All right, so we'll get into price action later. Anyway, it reflects growing demand for crypto native funding options on prediction platforms. Polymarket has taken the world by storm over the past 2 years, emerging as the largest prediction market where users trade shares tied to the outcomes of real-world events. You spelled gambling wrong, but that's okay. On Polymarket, traders are bullish about the Bitcoin price. About 83% of participants now predict Bitcoin will hit 130,000, while 52 and 35% are betting on 140 and 150,000 respectively. Long-term betting volume has exceeded $30.6 million. Polymarket now, or rather also accepts other crypto and stable coins like USDT and shitcoin 1, shitcoin 2 and 3 and 4 and 5, whatever. It doesn't matter. Only Bitcoin matters here. And then they talk about the New York Stock Exchange doing their $2 billion investment. The only part that's important here is that they're allowing for Bitcoin to be deposited into your Polymarket account directly if for whatever reason you want to gamble with your Bitcoin. I highly recommend not gambling. I have never understood the appeal of gambling, whether it's a sports book, whether you go to Vegas. To me, it's all putting money in a brown paper bag. It's like Schrodinger's money, right? You take your money and you put it in a box. It can either be burnt to a crisp or be more money or just as much money as you put in. But you'll never know until you actually lift the lid of the box after you've shaken it, right? After the wheel of the roulette table goes around, after the little spinners on the one-armed bandit in Vegas goes around, or after the final whistle blows in an NFL game. You'll never really know. It just seems to me if you're gonna gamble on Bitcoin. Don't gamble with Bitcoin. So going over to the United Kingdom, the UK has lifted a retail ban on crypto exchange traded, ETNs, paving the way for investments from pensions and ISAs, whatever the hell an ISA is. Siamak Masnavi is writing this one for CoinDesk. To get back up here to the top, the UK officially lifted its multi-year retail ban on crypto exchange traded notes. Oh, yeah, the exchange traded notes, or ETNs, saying the digital asset market has matured enough for individuals to invest through regulated products, even if investors will have to wait a little longer to add them to their portfolios. In a policy update on Wednesday, the Financial Conduct Authority confirmed that retail investors, that's you on the street, that's Joe Blow with his hot dog stand right on there on the corner, that's retail, and retail investors can now buy crypto ETNs listed on FCA recognized exchanges such as the London Stock Exchange. Crypto ETNs are exchange traded debt notes that track Bitcoin and shitcoin number one prices without giving investors direct coin ownership. They fall under the umbrella of exchange traded products. Oh boy. And they also include exchange traded funds. While global ETNs typically do not require physical backing, on the London Stock Exchange, crypto ETNs must be fully physically backed by underlying assets held by regulated custodians, and they are not allowed to use any leverage. That's actually good. While the ban officially lifted on Wednesday, there is a delay before retail investors will be able to actually add ETNs to their portfolios, which reports say is down to the FCA only starting to accept prospectuses, or prospecti, I guess, for prospective products on September the 25th. The UK Tax Authority, HM Revenue and Customs, said in a policy paper published on Wednesday that crypto ETNs can be held in stocks and shares, individual savings accounts, and registered pension schemes, allowing investors to earn tax-free returns within those accounts. From April 6, 2026, ETNs will be reclassified as innovative finance investments though their tax advantages will remain unchanged. Officials said that the shift reflects the government's commitment to diversifying long-term savings options and integrating digital finance into mainstream investment structures. The London Stock Exchange already lists several crypto ETNs from issuers such as 21 Shares, Wisdom Tree, and ETC Group, previously available only to professional investors. These products can now be accessed by retail investors through regulated platforms. However, popular U.S.-listed spot crypto ETFs, like, of course, BlackRock's IBIT, remain ineligible. Cannot buy them, as they trade in dollars and not UK exchanges as they trade in dollars on non-UK exchanges and are not recognized under FCA rules. Major ISA providers, including IG, AJ Bell, and Hargreaves Lansdowne, are expected to review the policy before enabling ETNs on their platforms. The rollout is expected to be gradual as providers adapt compliance systems and custody arrangements. So God really only knows when retail will actually be able to get a hold of these products, and then we'll have to find out how much appetite there actually is for them right now. So we'll have to see. But speaking of BlackRock's Bitcoin ETF surpasses 800,000 Bitcoin in assets under management after a $4 billion inflow streak. James Hunt, theblock.co. BlackRock's IBIT spot exchange traded funds crossed 800,000 Bitcoin, which is worth $97 billion in assets under management on Wednesday, which was less than 2 years after trading began in January of 2024. BlackRock's Bitcoin ETF has already accumulated over 798,747 Bitcoin as of October the 7th, according to its latest fund disclosures. IBIT's $426.2 million worth of net inflows yesterday. Say it again, $426.2 million worth of inflows yesterday was close, or rather enough, to tip it over the milestone, reaching approximately 802,200 BTC, or 3.8% of Bitcoin's total 21 million coin supply. For context, that puts BlackRock Holdings, on behalf of its clients, strongly ahead of the leading Bitcoin treasury company, Michael Saylor Strategy, which holds a mere 640,031 BTC worth a paltry $78 billion, accounting for 3.1% of the total supply. So between the two, they have 6.9, almost 7% of the total Bitcoin supply is held by two institutions. One is a private company. Well, actually, they're both private, but you get what I'm saying. One is a company, and one is holding shit on behalf of the people that buy. And I don't know. I guess Saylor could say he's holding Bitcoin on behalf of his shareholders too, but it's a completely different structure. But still, 7% of all Bitcoin that will ever be mined, not just what's flowing out in the streets right now, but 7% of all Bitcoin ever, is now held in the hands of essentially two people. Yay. I'm not really all that happy about that, by the way. Anyway, the combined U.S. spot Bitcoin ETFs attracted another $440.7 million on Wednesday, adding to an 8-day run totaling more than $5.7 billion, according to data compiled by the block. IBIT's 7-day positive run has generated over $4.1 billion worth of net inflows alone. Quote, the 8-day streak of ETF inflows underscores persistent structural demand, while corporate treasury participation continues to expand, adding ballast to Bitcoin's narrative as a strategic reserve asset. BRN head of research Timothy Messier told the block, quote, meanwhile, easing geopolitical risks via the Trump-brokered Middle East peace framework has reduced short-term volatility, giving traders a clearer runway into the fourth quarter. Quote, IBIT is number one in weekly flows among all ETFs with $3.5 billion, which is 10% of all net flows into ETFs Bloomberg senior ETF analyst Eric Balchunas noted on X ahead of Wednesday's flow data. Quote, also notable is the rest of the 11 OG spot BTC ETFs all took in cash in the past week. All of them. All of them had positive net cash inflows. Even GBTC somehow, and that's how hungry the fish are. 2 steps forward mode and enjoy it while it lasts. In quote, on Monday, the Bitcoin ETFs attracted their largest daily haul since pro-crypto Trump won the United States presidential election last November, bringing in $1.21 billion. The U.S. spot Bitcoin ETFs have now registered nearly $63 billion of inflows since their debut, with IBIT bringing in $65 billion and net outflows from Grayscale's converted fund offsetting the total. Quote, spot Bitcoin ETFs are on an all-time heater, have taken in absurd $5.3 billion over the past 7 trading days, $2 billion just over the past 2 days, says Nova Diaz Wealth Management President Nate GreatGhee. And he added, I remember when people thought the entire category would top out at $5 billion in total assets. Well, let's just pause to think about that for just a second. Now, I got a bit distracted because I got a message from my daughter who's not feeling well from at school. So I apologize for that. So there were people that were thinking that there was only going to be $5 billion in total assets among all 12 of the Bitcoin ETFs. And now we're looking at tens of billions of dollars, completely blown away all expectations. Kind of an important note that all these pros were like, oh, there's no way it's going to get over $5 billion. And we blew past that in a couple of days. It was ridiculous. Anyway, BlackRock's Bitcoin ETF previously surpassed 500,000 BTC mark last December, rapidly becoming the 3rd strongest U.S. ETF instrument in its first year. Speaking to Fox Business after IBIT crossed the 250,000 BTC level in March, CEO Larry Fink said, quote, IBIT is the fastest growing ETF in the history of all ETFs, end quote, adding his surprise at how much Bitcoin had gone up. Bitcoin was trading for approximately $69,000 at that time and has since gained a further 76%, currently changing hands for around $121,500 according to the block's BTC price page. So it doesn't matter if we hate the BlackRock and the Bitcoin ETFs. It doesn't matter. People clearly want them. And if people clearly want something, then a market is going to develop for that. It just is. And we can scream and kick and moan and cry all we want. It's not really going to matter. And like I said yesterday, I just can't argue with success. IBIT is the most successful exchange-traded fund in the history of that particular kind of asset. Gold ETFs, silver ETFs. I'm sure that somewhere there's a petroleum ETF. It's just of all the ETFs, the Bitcoin ETF is the most successful. Cry about it if you want. I refuse to do so. Do I like them? No, I don't. Am I going to buy them? No, I probably won't, unless for whatever reason I end up in a situation where somebody's saying, hey, we're going to give you a paycheck and we're going to offer you this pension plan or whatever they're going to call it nowadays. And you have your choice. You want to do this, this, or this. And it's like, which one of these gives me exposure to Bitcoin? That's the one I want. And they'll probably go, well, we've got this one and it has 10% Bitcoin ETF. Then yeah, I'd do it. That's when I would do it. But if I have the choice to whether or not I'm going to buy a Bitcoin-based product or Bitcoin itself, I'm always going to choose Bitcoin itself. Let's run the numbers. CNBC, futures and commodities, and everything is in the red. I don't know what the hell happened today. I guess I missed an important piece of news, but everything is down. And we'll start with everything being blood red across the board in energy. Brent North Sea is down a point to 65.61. West Texas Intermediate down a point to 61.94. Natural gas bucking the trend, going the same direction this time, down 1.3%. Gasoline is down 0.6%, and Merbon crude is down 0.75 of a point to $67.13 a barrel. Most of the shiny metal rocks are in the red today, except for palladium, which is continuing its rally, 2.15% to the upside. Meanwhile, gold has lost a point, but still $32.40 above 4K. Platinum is down 0.4%. Silver is down 1.5%, but still is topping $48 an ounce, and copper is up 1.5%. Most of ag also in the red today. Biggest loser seems to be coffee, 2 points to the downside. Biggest winner is lumber, 1% to the upside. Meanwhile, live cattle up 0.17%. Lean hogs down 1.5%. Feeder cattle up 0.85%. All of legacy indices are down in the red. S&P down a third. NASDAQ down the same. Dow is down 0.4%, and the S&P Mini is down 0.81%. So everybody's just basically getting kicked in the crotch this morning, including Bitcoin, which is chilling out at 121,220. We are now at a $2.42 trillion market cap, and sub 30 ounces of shiny metal rocks. You can only get 29.9 ounces of shiny metal rocks with your one Bitcoin, of which there are 19,932,044.92 of, and average fees per block are, well, normal at 0.03 BTC taken in fees on a per block basis. There's about 32 blocks carrying 50,000 unconfirmed transactions waiting to clear at both high and low priorities of 3 Satoshis per VByte. Oh, we've lost the Zetahash handle. Oh my God, it's over. Pack it up, boys. We're going home. 999 exahashes per second is the security quotient of the Bitcoin network right now. From yesterday's episode of BitcoinAnd, compliant innovation. I love that phrase. Compliant innovation. You can innovate, but it better comply. That's not innovation. Anyway, Wartime with 133 says, I just used your code and I am excited to try the Comfrey salve from Permanerd. Sweet. Got myself a sale. It's like fishing, man. I'm just fishing for Comfrey salve. Tulips with 1,000 says, tulips. Thank you, sir. You just ruined my life. Oh, damn, that sucks. The amount of suit speak and control speak in my life is off the charts. It has always been there, but I did not notice. I guess that is what being a normie really means. By the way, Strike Bitcoin loans just went live this week in Europe. It is a big deal around here just when loans are being labeled, quote, immoral in Bitcoin circles. With all this news, we can see how the fiat standard was just tulips and is slowly going to zero. Okay, look, I don't consider a loan on your Bitcoin immoral. If you're doing it with a company like the old, what was it, BlockFi? I think it was BlockFi. The people that were entangled in FTX and Alameda and Tron, or not Tron, whatever the other one was. It doesn't matter. It's not even then that it was immoral. What I would be suggesting is that if you knew anything about what was going on underneath the hood at BlockFi and you were still shilling this shit, and even if you didn't know what was underneath the hood, there's a lot of mechanics that can just listen to a car and understand what's going on underneath the hood without opening the hood. And a lot of us were like that. We were like, there's something very, very wrong about this company. And they were making loans against people's Bitcoin. Right. And the people there was the people that put their Bitcoin up to get these loans, they got hosed when FTX went belly up. All right. So it's not taking the loan on the Bitcoin that's immoral. That's not it. You have to go look for the companies that are going to do you right. Look at Unchained out in Austin, Texas. If you really need a loan, go look at Unchained. And Jack Mallers has been a solid Bitcoiner for freaking ever, dude. I don't give a shit what anybody says about his daddy, the fact that he comes from money, the fact that he was part of the, that his family is part of the Chicago, building the Chicago Mercantile Exchange or the CBOE or whatever it was that they were involved with. I don't care. I've never seen Jack Mallers rip anybody off. And if Strike is making loans against Bitcoin, then I needed a loan using my Bitcoin as collateral, I would look at Strike. If you don't have to take a loan, then don't. But if you do, and you're looking at a solid company, they're looking at your Bitcoin as a solid collateral. It is pristine collateral. It's amazing collateral, right? It's the best collateral. It is. I mean, I'm just kind of being funny here and being Trumpish and all that shit, but it's true. I don't find taking loans against your Bitcoin immoral. The immorality comes from the people that run those companies. Are they doing right by their customers? If the answer is no, then that shit is immoral. But that's on the company side, not on the person side. With 1776 sats, 1776 says, good show. It's notable that neither the Square Bitcoin story nor the Bring-In story says anything about the Estonian TradFi integration project makes it. Oh, hold on. This is 1776 may not be a native speaker or he's writing on his mobile. Let me start that again. It's notable that neither the Square Bitcoin story nor the Bring-In story about the Estonian TradFi integration project makes any mention of the need for governments to loosen up on tax reporting rules and implementation of Deminimus rules regarding spending Bitcoin. Okay, no, my bad. That is a good sentence. I think my eyes just kind of wobbled there for a second. Seems like a good way to mass KYC people that have Bitcoin to spend. I don't know. None of us know. Not yet. But you're right. It is notable that they haven't really said anything, but they may start saying something about it because we're about to get into a news story about that. So hold on to your hats. Turkey with 500 says nothing. Psyduck with 750 says Psyduck. That's the weather report. Welcome to part 2 of the news that you can use. Dorsey, Lummis push for Bitcoin tax relief as block expands BTC payments. Vismaya V, decrypt.co. Block founder Jack Dorsey has called for a federal tax exemption on everyday Bitcoin transactions, urging for the revival of a legislative effort that fell short just months ago when pro-crypto senators ran out of time to attach critical tax reforms to President Trump's massive reconciliation bill. Quote, "We need a de minimis tax exemption for everyday Bitcoin transactions," Dorsey tweeted, as his payments company announced it is debuting a new Bitcoin payment and crypto integrated wallet targeting small businesses using its Square point of sales system. Quote, "Working on it. If this is of interest to you, please tell your senators/House member," end quote. Cynthia Lummis from Wyoming responded to his tweet. Okay, so she responded directly to Jack. The exchange points to unfinished business from July when Lummis attempted to attach crypto-friendly amendments to Trump's One Big Beautiful Bill, but failed to get them to the Senate floor before Vice President J.D. Vance cast the tie-breaking vote passing legislation. The proposed amendments would have included a de minimis exemption allowing Americans to avoid reporting crypto transactions under a few $100s for capital gains purposes, which is exactly what Dorsey is now demanding. Currently, the IRS treats crypto as property, meaning even small purchases trigger taxable events that create significant reporting burdens for merchants and consumers alike. In the hectic final hours of negotiations over the reconciliation bill in July, pro-crypto senators and industry policy leaders raced to include the de minimis exemption and other benefits for crypto stakers, miners, and businesses holding digital assets. Lummis had vowed to reintroduce the proposal in upcoming Senate sessions, calling it a key step forward for Bitcoin adoption. Arthur Azizov, founder and investor at B2 Ventures, told Decrypt that a de minimis exemption is a pragmatic fix for a paperwork problem, adding that it could help merchants and wallets experiment with Bitcoin. But Azizov cautioned the exemption alone won't turn Bitcoin into a reliable payment method, noting that stores can still lose money if Bitcoin's price changes between payment and conversion to dollars. He added, the reform needs to be part of a package that includes clear broker reporting rules, anti-fragmentation protection, and fiat conversion tools to become a realistic step toward broader merchant adoption. Lummis had remained active on crypto tax reform on multiple fronts. In May, she and Senator Bernie Moreno sent a joint letter to Treasury Secretary Scott Bessent demanding immediate action on a separate but related Biden-era tax policy that put U.S. crypto firms at risk of paying millions in taxes on profits that they have not realized. Quote, neither Congress nor FASB planned this outcome. It's the unintended result of basing tax liability on decisions by a private organization, not principles of taxation. So, it looks like we might be able to revive this de minimis issue, which is going to be very important for Jack Dorsey and his company Square with the introduction of Square Bitcoin, which I told you all about yesterday. And again, I will remind you, this is your chance to go talk to your farmer or rancher at the farmer's market, or if you go to, knitting festivals and you buy yarn, they are probably using Square to sell you their yarn. So that would be your in on talking to the merchant about, hey, do you take Bitcoin? And then you can say, well, even if you don't take Bitcoin, because I think this is the way this is going to roll out, I will be able to use Bitcoin via Square to pay a merchant using Square with Bitcoin, even though the merchant doesn't know that they're getting Bitcoin because they haven't, set a button in settings that says keep a percentage of my Bitcoin. It will be automatically converted to dollars. They probably don't even see it. Now, I don't know this for sure, but I'll bet you my hat that that's the way it works. That if you're a Square merchant and I come up and I say, I want to buy your steak, then you sell me the steak and I pay in Bitcoin, and all you see as the merchant is that you received dollars for it. And when I tell you that I paid you in Bitcoin, you go, no, I got dollars. The merchant says, I got dollars. See, here it is. It's dollars. It's like, yeah, but if you were to go to settings and you flip this other button over, you can set it to where a percentage of that remains in Bitcoin and you can keep it on your books. I think that is a critical infrastructure to have as we move forward. We'll have to see exactly how it works. I have not seen the interface and I haven't seen anything about the particulars of how that's going to work. But when they release it, I have Square on my phone and I will be able to view it myself, and I'll tell you all about what I see when I get it. And that's supposed to be November the 10th of this year, by the way. Now, 4-year cycles. Here's the real reason the 4-year Bitcoin cycle is dead, according to Arthur Hayes, as written by Martin Young from Cointelegraph. BitMEX co-founder Arthur Hayes agreed that the 4-year crypto cycle is dead, but not for the reasons most people believe. Quote, as the 4-year anniversary of this 4th cycle is upon us, traders wish to apply the historical pattern and forecast an end to this bull run, said Hayes in a blog post. He added that while the 4-year pattern worked in the past, it is no longer applicable and it will fail this time. Hayes argued that Bitcoin price cycles are driven by the supply and quantity of money, primarily USD and the Chinese yuan, rather than arbitrary four-year patterns linked to halving events or as direct results of institutional interest in cryptocurrencies. And past cycles ended when monetary conditions tightened, not because of timing, Hayes said. Hayes argues the cycle is different for several reasons, including the U.S. Treasury draining $2.5 trillion from the Federal Reserve's reverse repo program into the markets by issuing more Treasury bills, and U.S. President Donald J. Trump wanting to, quote, run it hot with easier monetary policy to grow out of the debt. Yeah, I know. That's not how you do it, but whatever. There are also plans to deregulate banks to increase lending. Yes, I'm sure what could possibly go wrong there. Additionally, the United States Central Bank has resumed rate cuts despite inflation being above its target. 2 more rate cuts are predicted this year, with 94% odds on an October cut and 80% odds on another one in December, according to CME futures markets. Bitcoin's first bull run coincided with Federal Reserve quantitative easing and Chinese credit expansion, ending when both the Fed and the Chinese central bank slowed money printing in late 2013. The second, quote, ICO cycle was driven primarily by the yuan credit explosion and currency devaluation in 2015, not the United States dollar. The bull market collapsed as Chinese credit growth decelerated and dollar conditions tightened, according to Arthur Hayes. During the third, the COVID-19 cycle, Bitcoin surged on USD liquidity alone while China stayed relatively restrained. It ended when the Fed began tightening in late 2021, according to Arthur Hayes. Hayes then argued that while China won't fuel this rally as much as it did in previous cycles, policymakers are moving to end deflation rather than continuing to drain liquidity. This shift from a deflationary headwind to at least neutral or mildly supportive monetary policy removes a major obstacle that would have killed the cycle, allowing U.S. monetary expansion to drive Bitcoin higher without Chinese deflation counteracting it. Quote, listen to our monetary masters in Washington and Beijing. They clearly state that money shall be cheaper and more plentiful. Therefore, Bitcoin continues to rise in anticipation of this highly probable future. The king is dead. Long live the king, end quote. On-chain analytics firm Glassnode stated in August that, quote, from a cyclical perspective, Bitcoin's price action also echoes prior patterns. I think when it comes to the 4-year cycle, the reality is that it's very likely that we'll continue to see some form of a cycle, crypto exchange Gemini's head of APAC region, Saad Ahmed, told Cointelegraph earlier this month. And Arthur Hayes has been around quite a while. He kind of knows what he's talking about, but I still view this as a prediction. We will have to see. It's like if you're sitting on a pile of cash and you're listening to somebody like Arthur Hayes to direct you on how to make your ultimate decision of what to do with that cash, I wouldn't do that. I like Arthur, and I think he's smart, and I think he's been in the game long enough to be able to say these things, and he may be right. But just buy Bitcoin. Just buy it in small chunks. Buy it in slightly larger chunks. Buy it day to day. Buy it every week. Buy every month. Whatever it is, just make sure that you're off of zero. Once you're off of zero, then you have a better frame of reference as to what to do with future money. But nobody knows what the hell's going on. We got gold and silver punching through the firmament of the atmosphere. And basically, Bitcoin's just kind of chilling out, being all lackadaisical, like it's, drunk by the pool, whatever. Does that mean rotate out of Bitcoin into gold? No. Does it mean rotate out of gold into Bitcoin? I don't know. Do you like gold? It's okay if you do. I don't have any problems with gold. I don't personally own any, and I probably should, but I'm too enamored with the way Bitcoin works and the promise for me to start going, oh, I'm just going to rotate into some gold. No, that's not it. But the cycle, or not the cycle, but we've seen this pattern before with gold. Weimar Republic. Yeah. Gold against the Weimar mark, for lack of a better term, their fiat paper money back in the day, it fluctuated and oscillated like, it makes the oscillations in Bitcoin look tepid at best. The gold price against the Weimar Republic mark, if you look at that chart, it will make you sick just looking at it. It scorches through the atmosphere and then plunges back down to earth and then scorches through and we're talking about it going back and forth and back and forth. And we're talking, multiple tens of percentage points, sometimes over 100% in both directions within a month of each other. It's really, go look at the gold price versus Weimar Republic mark. Look at that graph as they're coming into the collapse of the Weimar Republic, and it will make you sick. If it doesn't, then you're obviously a roller coaster aficionado. From Decrypt, the decentralized map paying for data that Google uses for free. Vince D'Aquino has it. Open Ledger, a blockchain infrastructure firm building out AI systems for transparent data attribution, is expanding its ecosystem with the addition of SenseMap, a new decentralized mapping network. The platform enables users like you, like me, users. The platform enables users to contribute real-time information such as safety, crowd levels, and noise, all of which are verified on-chain and used to build an open, community-owned map. Quote, in places traditional maps overlook, local contributors can fill in the gaps by sharing real-time context like roads, crowd density, safety, or accessibility details, Ram Kumar, core contributor at Open Ledger, told Decrypt. Each submission, now here's where your ears need to prick up. Each submission, so I'm using this map, I'm a user of the map, and I see a car wreck, and I'm going to submit that information to SenseMap. That's what we're talking about when I read this. Each submission is tied to a verified on-chain identity and then reviewed by community validators who earn reputation over time. Reliable contributors gain more influence in the system, while inaccurate or spam entries are flagged and penalized to maintain the trustworthiness of the data. Asked whether the open model risks low-quality data, Kumar said accuracy is maintained through on-chain reputations, staking, and validator review. Quote, spamming isn't just discouraged, it's economically unsustainable, he said. Alphabet, the parent company of Google, reporting $82.5 billion in Google services revenue for the second quarter of this year, up from $73.9 billion just a year earlier, according to its latest earnings release. The services revenue segment includes Maps, Search, and Google Play. When the company does not break out Maps revenue, analysts have noted its commercial potential as far back as 2019, when Morgan Stanley's Brian Nowak projected that Google Maps, just Maps, could generate roughly $4.8 billion annually. Later reports indicated that the platform's ad revenue was on track to reach $11 billion by 2023. Open Ledger claims that as SenseMap expands, its accuracy improves rather than declines, driven by a reputation-based validation system that rewards consistent contributors and verifies every data point through its on-chain proof of attribution protocol. The protocol works by linking each data contribution to a verifiable on-chain record showing who created it, when it was created, and how it's used in downstream AI models, ensuring that every new data point strengthens the network's accuracy instead of diluting it, Kumar said. Quote, as the network scales, trust is maintained through a reputation-based validation system. The more consistent and reliable a contributor's data, the higher their validator weight, Kumar explained. Other observers note that maintaining accuracy in decentralized mapping depends less on central coordination and more on verifiable data between independent nodes. Quote, trust comes from reproducibility, Ari Trar, co-founder and CEO of Decentralized Physical Infrastructure Network XYO, told Decrypt. When multiple nodes reach the same result through cryptographic proofs, accuracy is established by consensus rather than control, he explained. He then added that decentralized mapping works best where centralized data collection falls short, such as in developing regions, disaster zones, or rapidly changing urban areas where real-time verifiable updates are most needed. There's only one problem with this entire thing. Maybe two. But the one that really screams to me is who? You. They say, of course, Decrypt probably didn't really ping the question, but the question that is on my mind, how do you verify the identity of that person? This is a critical thing when it comes to something like geolocation. I mean, yes, Google already knows where I'm at. I get it. But I don't need even more people knowing where I'm at. Google, they might know where I'm at. And are they going to share it with some other people? Yeah, for a really high amount of money. Not just me, it'd be like an entire data set, but they're not just going to give it away, right? These guys seem to be leveraging some stuff that Google Maps is doing, but they're going to know who's doing what, where, and essentially, if I'm saying, hey, there's a wreck over here, and I consistently add data under my digital ID, which they have yet to explain, right? Then they know my patterns. It's bad enough that Google knows my patterns. I don't need a private company, another private company, God only knows what their morality is, knowing what the hell I'm doing. And through AI, what do I notice? Is he more likely to tell us that a car wreck is there? What advertisements can we send his way? Or is he more apt to say that this park is full? Because those are two very different kinds of people. If I'm constantly looking at negative shit, like I only notice car wrecks, or I'm constantly being positive, I like sunshine and being out in nature because I'm always at a park, and I'm always saying, hey, this park is actually pretty densely populated. Let's go to another one. And then I say, oh, this park is, see? And that's almost like nothing. Think of all the shit you notice. Notice your own patterns before you give them to somebody else. But what I'm getting at here is this can be done with my nostr ID, which is not tied at all in any way, shape, or form to my real world identity unless I want it to be, right? Unless I absolutely want it to be so, I don't have to do that. There's no reason that this entire system that was described in this article cannot be replicated in a nostr type environment. The question is, well, is it valuable enough for enough people to do it? Maybe, maybe not. That's not really the point. I'm just saying that these kinds of things, it seems to be like, oh man, we might even pay you some money. Might even, throw you some Satoshis, especially if you become a validated regulator or whatever it is that they want to call it. It's like, and I'm constantly on my phone giving them data. No, that's probably not a real good idea. If we got to do this, then we should do it on something like nostr. At least nobody owns the data, and it could be very, very useful. That might be something for Satlantis to play with. But I don't trust these people as far as I can throw them. But this will not be the last time that somebody wants to identify you under their own auspices, under their own framework, for their own purposes, of which you are the product. And you're not going to get enough money being the product. Anyway, Atlas 21, in the United States, 64% of voters consider a candidate's stance on digital assets as crucial. Kind of surprised me. A recent survey conducted by McLaughlin and Associates in collaboration with the Digital Chamber has now shed light on the relationship between digital assets and elections in the United States. According to this research, 64% of voters believe a candidate's stance on digital assets is an important element in their voting decision. 64% of eligible United States voters are saying, I want to know their stance on digital assets. That's a massive voting block. The survey also found that crypto investors place more trust in the Republican Party than in the Democratic Party when it comes to the developments of the sector in the United States. 3/4 of investors support the Trump administration's approach to rolling back regulations and enforcement actions from the Biden era on digital assets, measures they believe would, quote, make it easier for cryptocurrencies to grow and expand inside the United States, end quote. The poll comes at a sensitive time for the United States government, with the federal government shut down, now in its second week due to the lack of an agreement between Democrats and Republicans on two key government spending bills. Democratic figures, including, of course, Senator Elizabeth Pocahontas Warren, have raised concerns about Trump's ties to the digital asset sector, particularly in relation to World Liberty Financial. Quote, in March of 2025, WLF announced plans to launch USD1, the stablecoin your wallet has been waiting for. Warren said in a statement earlier this year. Yeah, I'm kind of laughing about it too. Warren emphasized that, quote, the launch of a stablecoin directly tied to a sitting president who can personally benefit from its success represents an unprecedented conflict of interest, posing significant threats to our financial system. That's the end of the article, and I find myself in awe that I'm actually in full agreement with Senator Elizabeth Warren. It is a conflict of interest, and it's not just about the stablecoin, although that's probably the very tip top. All the rest, the World Liberty Financial stuff, is a conflict of interest for the sitting president of the United States. Whether he's wearing a red jacket or a blue jacket, it doesn't matter. It is, by definition, a extremely huge conflict of interest. It just is. It doesn't matter if you love Trump or hate Trump or whatever. You could have voted for Harris or laughed when she lost. It doesn't matter. This is a conflict of interest. I said it a long time ago when the first time that Trump opened his mouth about anything that even remotely resembled cryptocurrency as being part of him or his personal life or his family or his family's personal life, I was screaming, this is a conflict of interest and it's going to come back to haunt your ass. So where do we go from here? Well, this poll demonstrates exactly what the Republicans have to do to win the midterms. There's no other way forward. The Dorsey and Lummis argument of de minimis tax exemptions for everyday crypto purchases has to be passed before elections. It has to. And there's a couple of other things. But if you want to win these elections, given 64% find the stance of politicians on digital assets important and a crucial part of how they're going to make their voting decision, then you have to do something like pass the Lummis bill about de minimis. you might even consider buying some Bitcoin into the strategic reserve. You need to go ahead and figure out how to do that under the auspices of not having it, burden the taxpayer. Where it's not going to use taxpayer money to actually buy the Bitcoin. Figure it out, dude. Use tariff money. I don't care. Do something. Because if you don't, the midterms is going to be a shit show. And now you've got the one piece of evidence that you need that if you follow, will be able to give you a hell of a lead come midterm time. But that's all up to the candidates. I will also say this. If the Democrats want to have a hope in hell, they're going to need to become very friendly with things like, hey, we'll have our own Deminimus tax thing on crypto, and we want to get that passed. They're going to need to actually match the fervor that Trump had coming into the election when he embraced the Bitcoin crowd. All right. So the only real winner here is Bitcoin. Because now the blue team and the red team, now they have to actually kind of join forces because they want to win the elections. So it's going to be an interesting midterm. Let's just say that. Last up for the day, Hell in Parts Cointelegraph. SoftBank's PayPay acquires a 40% stake in Binance Japan. Damn. Binance Japan has entered into a capital and business agreement with PayPay, a mobile payment service operated by the major Japanese investment holding company SoftBank Group. SoftBank's PayPay acquired a 40% equity stake in the Japanese subsidiary of global crypto exchange Binance, with Binance Japan becoming an equity method affiliate of PayPay as of September 2025, the company announced on Thursday. Following the acquisition, PayPay and Binance Japan plan to launch integrated services to allow Binance clients to buy and sell crypto assets using the cashless payment service PayPay Money. Quote, through its continued evolution from a cashless payments business into a digital financial platform, PayPay will strive to deliver new value to users while contributing to the advancement of Japan's financial infrastructure, the company said in an announcement. Quote, PayPay has been advancing digital finance through smartphones in collaboration with our group companies in the financial sector, which share strong synergies with payments. PayPay corporate officer Masayoshi Yanesi said in a joint statement on Thursday, quote, by investing in Binance Japan, which is part of Binance, the world's largest digital asset exchange by trading volume, we will provide Binance users with solutions that combine the convenience and security of PayPay, the executive added. PayPay's investment in Binance Japan builds on its significant milestones in the market. Launched by SoftBank in 2018, PayPay surpassed 70 million users for the first time in July of 2025. Not bad for 7 years or 8 years. PayPay processed at least 380 million remittances in the year of 2024, a 36% increase from the 280 million transactions in 2023. This growth positions PayPay as one of Japan's leading payment platforms as bank transfer volumes rose by only 7.5% over the same period. According to a spokesperson for Binance Japan, the platform currently allows users to deposit and withdraw Japanese yen via bank transfers, making the PayPal integration a crucial step toward expanding payment options and operational convenience. They may have actually meant to say PayPay, but it actually is written PayPal. I don't know, whatever. Quote, by combining PayPay's extensive user scale with Binance's innovative technology, we will be able to make Web3 more accessible to people across the country and deliver secure, seamless digital assets services, said Takashi Chino, Binance Japan's general manager. Apart from pushing local growth, PayPay has recently sought to scale operations globally, announcing the launch of its payment service in South Korea in September. PayPay also confidentially filed with the U.S. Securities and Exchange Commission for listing American depository shares on a U.S. stock exchange in August. The exact schedule, size, and price of the public listing were yet to be determined by the time of the announcement, PayPay said, adding that the potential listing is subject to market and other conditions. The acquisition took place amid a strong rally in BNB, which is the native token of Binance's BNB chain, which recently rose to third place among cryptocurrencies by market capitalization. As of Thursday, BNB traded at about $1,300 per coin, up 26% over the past 7 days, with a market cap of about $182 billion, according to CoinGecko. So the question is, will all Binance users, not just Binance Japan, have some sort of accessibility to this wonderful and beautiful PayPay app? I've never seen it, never heard of it before. But again, with the theme of can't argue with success, I can't argue with success, because we're talking about, what'd they say? 380 million remittances in the year of 2024 alone, which is a 36% increase year over year. Dude, that's kind of big. 70 million users? What's like, is it? I think they hit 70 million users for the first time in July of 2025. And now they all have exposure somehow, to do certain things and reach for stuff within Binance Japan. So do they get all of Binance? Do Binance users get all of Pay? We don't know. But again, I can't argue with success. We seem to be winning on all fronts, and yet, here's Bitcoin chilling out at 120,423. It's like it's drunk by the pool. And somebody go turn Bitcoin over before it gets a bad sunburn, and I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.